Stop me if you heard this one. It's called the margin call squeeze of 2022. We are looking at AMC up 20% today. A lot of apes seeing green, and Professor Meatball and I are here for you guys. We're going to take a look at what the options data says about a potential gamma squeeze. We're going to take a look at what Ortex says about a potential short covering and a short squeeze, but we're also going to be able to explain from the ground up exactly what happened in 2021 and why is it happening again. Hey, how's it going? We want you guys to be able to understand this from the ground up, so that's why we are going to start right now. So if you guys had a chance to be able to take a look at the markets today, you'll probably had seen that there is a lot of options activity, especially after the fact that we have had a tumultuous earnings call. We had Adam Aron coming on and explaining a lot of what he has now done to generate new value for the company, as well as give every single stakeholder of AMC a brand new stock, not the same stock. So it's not dilution in a commonly known sense. But you probably had a chance to take a look at Adam Aron's continuation of his 12-part tweet. In fact, this last few parts is one of the most important pieces that he has to impart with us, starting at number 9. For so many reasons, including what we can do with it in the future, the introduction of AMC Preferred Equity Units APE stock has the potential to immensely strengthen our company. Looking long term, we believe this move is not good news for those who root against us. So if you guys do think that Adam Aron is on your side, comment that down below. If you guys don't, do also comment out which like you guys are. As you guys slap that like, we're going to destroy that algorithm right now with you and us combined. Number 10, Adam Aron says, we repeatedly have said that AMC's shareholder approved back in 2013 the creation of preferred equity. Each ape will have similar rights to a common share, but cannot be converted into common stock unless shareholders now or in the future vote to approve that. And then number 11, most important, apes give AMC a vital new currency to pay down debt for M&A and to raise cash if we choose. They lessen near-term risk. We cannot survive this pandemic, and we increase the likelihood we thrive. All of this fundamentally and deeply strengthens AMC. And now finally, because he did foreshadow it in his very first part of his tweet, he talks about 3D chess. I must tell you all, it's complicated. It's really satisfying playing 3D chess, especially if you know how to play it well. Today, AMC Entertainment announced both vastly improved earnings and our game-changing new ape security. So that's Adam Aron telling it directly from his point of view. But what is one of the biggest skeptics in the market trying to say about the earnings call? Let's take a look at Motley Fool, a well-known bear of this stock, and even they have pretty nice words to say. AMC's revenue rose 162% to $1.1664 billion. It's a big move, but was roughly in line with expectations. We knew this would be a big step up for the exhibitor. Domestic box office receipts for the industry in the second quarter soared 186% compared to the weak slate in the springtime of last year. International exhibitors faced even better, an important point since 22% of AMC's top-line results were international. Taking a deeper dive into stateside operations, AMC lost market share, but this isn't a deal breaker. The number of tickets that AMC sold in the US for the quarter rose 144%, and the average price paid per ticket climbed 5.7%. Stack one on top of another, and you arrive at 153% year-over-year increase. A big move, but well below the national pop. This isn't a failure on AMC's part as much as a smaller chains finally gaining momentum after false starts earlier in the pandemic cycle. Which means that now we are fully off to the races, and AMC has an immense head start. So once again, brings us all the way down to Ortex, which we explained in a very now appropriate video about when the FTD amounts had increased the most in 2021 was exactly the precursor to when that June-July gamma squeeze occurred. We were able to track that last year, and we just explained it in the video 2 weeks prior. So if you haven't taken a look at that, please do. It's on the channel. It has an opportunity to share us once again that as these shorts have started to diminish week over week, we're looking at about 18.4% short interest of free float. This is compared to 20% 7 days ago. This is what Ortex can see. So once again, you have to take it with a grain of salt, but if we had 127 million shares on loan today, but 144 million shares last week, then that is going to be very, very different for the shorts, as they now have a different number to be able to push downward. Especially now with this dividend, we want to be able to do the right research and understand exactly how synthetics and the share count will actually work. So that is a big reason for a bunch of apes to say we do want to vote yes on this. And so all of these dividend talks are interesting, are perhaps very bearish in the beginning, and now as we see for today's price action, very bullish. But how does it all add up at the end? Let's take a look at the options chain real quick before I talk about the margin call squeeze. So the options chain right now, we're taking a look at roughly $20 strike, which where we saw just 2-3 days ago was mainly aggregating around $15 strike. Now we're looking at puts at $25 strike, but it is vastly outmatched by an even call versus put ratio right around $30 flat, and even all the way out to $145 again. We saw that in the beginning of last year, and now we're seeing it resurge back all the way up to the right side of that gamma chain. As you guys know, the way that delta hedging works is that the closer you get to the strike price of a sell side of a potential call, you then have to hedge as a large institution. So by the same principle, we see that the price of the stock starts rolling with momentum and acceleration that you guys can see as we push past $20 today, and will likely continue above $20 into Monday. But if you guys want the full analysis, I'll be doing one on Sunday afternoon so that you guys have exactly what you need for Monday. So do make sure that you are checking in for that. And so now all the way back to the margin call squeeze. If you have a small institution with a short position in AMC, because even the fundamentals aside, you probably had people looking at AMC's price action in the last few weeks and then thinking, yeah, this is a good opportunity, especially before earnings call, which AMC historically has struggled with in the past. It's a great time to buy puts or short. And especially those who have overshorted themselves or have brought a humongous position against the stock, and then the stock sees a 20% surge on a day where a lot of analysts, a lot of traders, and a lot of retail investors, perhaps, unlike you guys, had taken short positions against AMC. They are now reeling from it. So one margin call from a smaller bank will then, or a smaller institution, or even an individual, will then trigger a buy action, an immense buy action in order to cover the debt that they then owe. Well, then that requires the stock, based on just that buy action alone, well, to start pushing. And as the stock pushes even higher, it becomes uncontrollable. That's likely what happened during June and July of last year, but we've been doing the research, and now we want to ask you guys, what do you guys think? If you guys found some value out of this video, please do drop a like on the video. And if you guys like this new format with the Andrew Mo and Meatball up there in the corner and everything concisely laid out for you in the side, let me know. And as always, I hope you guys have an excellent weekend. And for now, but not for forever, I'll see you guys in the money. Peace.